Over the last 60 days, detached prices have gone up on average 8%. That's right, 8%. Now, that is not normal. To give you some context, if we look at 2019, which was a pre-COVID year where we actually had seasonal trends, historic seasonal trends, over the exact same 60 days as now, the detached price appreciation going into the spring market was about 4.5%. We're now at 8. So in other words, the price appreciation that we've experienced over the last 60 days is effectively double what we would expect in a spring market. My name is Vas, and I'm a real estate broker right here in the city of Toronto, where I help investors and families navigate the insanity of our real estate market. Now let's take a look at some of the numbers. So here's a graph illustrating the sales price by property type. So we have at the top detached, then we'll have semi-detached, townhouses, condo townhouses, and condo apartments. As you'll see, what you need to focus on is just the price gains that we have seen across detached properties. And this is pretty much across the entire GTA, especially anything that's presentable, well marketed. It's gone in just about a week or 8 days. This recovery is felt pretty much throughout the entire GTA. So the top line right here is York region, as you'll see. Right below it is Halton region, then Toronto and Peel, and then lastly Durham. But across, the trend is pretty much the same. We're experiencing above average seasonal gains right now as we're going to the spring market. When it comes to trying to understand what is actually happening in the market, I think this chart does a pretty good job. This shows us the total number of listings that are currently available on the market. So this is March, the pink line is for 2023. And as you can see, it doesn't take a rocket scientist to figure out that we have well below average listings available for sale right now, yet all the buyers are back in full force despite the high interest. So because there is no inventory or very little inventory to choose from, anything that gets listed right now is pretty much sold within a week. The last metric I'm going to leave you with is the sales to list price ratio for year-over-year seasonality. So the key thing to keep in mind here is that the second we go over 100% for sales to list price ratio, meaning that things are selling over asking, that means we have effectively entered a seller's market officially. So this coincides with what I saw on the ground floor. January was quiet, and middle of February things just took off, and now we're into March, well over 100%, meaning that for the most part things are selling over asking. This coincides with prior trends. For example, in 2022, when we hit peak market, things dropped off. We were selling well over 100%, and then towards the second half of 2022 it became a total buyer's market, and something a lot of us felt. This is where people did not want to list because they were not getting the prices they wanted to. Going into April and May of 2023, it's going to be an interesting time to see whether or not we're going to start following some sort of a seasonal trend, meaning that going towards the summer, things should taper off and the market should become a lot more balanced, not as insane as it is now. I've been caught off guard with this. I did not expect numbers like this, appreciation like this, and I think it will be short-lived personally. And I want to make sure that people do understand that there's been talk of recession, this looming recession that has not yet happened. And I think it's very important to keep in mind as a seller and as a buyer that the second there's any hint of job loss, I can speak from a buyer's perspective, market sentiment changes overnight. So while the market's good today and maybe it's good tomorrow and the day after, if we do enter a recession, I am convinced that we're going to have a massive pullback in the market because we cannot have these price gains at the interest rates that we currently have.